Does lead us to our talk of the tape, whether Nvidia's meteoric rise has happened too fast, and if that incredible run has left the market unstable now. Let's ask our panel. Malcolm Ethridge is Vice President of CIC Wealth, Bryn, Talkington, Requisite Capital, Stephanie Link, Hightower. All three are CNBC contributors. Good to have everybody here. Bryn, I'm going to begin with you because you're the one who owns Nvidia. As I said, it had this quick correction of 10%. What do we make of that? Should we be concerned about where this stock is today?
I think it's so healthy. We would be concerned if it just continued to go up 2 to 3% a day. If you just look at basic technicals, it was so far above the 50-day moving average. That number is like close to $100. I doubt it gets there, but it needs to take a breather and consolidate. And I feel quite confident sellers will come in. But remember, earnings don't come out until August 21st, so it's like the very end of earnings season. So there's definitely some time to digest, think about, let it sell off a little bit. But once again, I feel really confident sellers are going to come in because they're going to have another spectacular earnings quarter on August 21st when they crush it year over year on revenues and earnings.
Yeah, you know, I mentioned the meteoric rise, Malcolm, that the stock has had. I read this stat earlier on Halftime Report, and I find it astounding. Maybe the most incredible stat that I've ever seen. Nvidia has added more than $880 billion in market cap in 21 trading days. In 21 days. That's incredible.
Well, so your question about whether we're likely to see the slide continue or if this was just sort of a blip, we just got, as quickly as Nvidia has rallied, we just got a bear market that fast, right? So escalator up, elevator down. But I think it's a bad idea to bet against Nvidia here, right? The last couple of years, if you did from about 400 to today, you would have been wrong, right? So I think Nvidia is one of those that it's good to own in proportion to the rest of the portfolio, but it's a bad idea to go chasing here.
Hey, this is not betting against, too. Let's parse those words a bit because, you know, you could still love the stock and look at the rise that I said, and then when I read that number, the $880 billion in market cap, and just say now is the time to, you know, cash in or take a fair amount off the table rather than continue to buy in. That's what I'm assuming that clients are asking people like you, who may not have as much exposure as their friends or others. They hear about this story, you know, nonstop and are wondering, what am I supposed to do now?
So I was watching Halftime earlier, right? I saw the guys talking about trimming their positions, well, save for Jason, right?
Yeah,
but the guys were talking about
two of the three who own the stock.
They're trimming their positions, but I didn't hear anybody talking about, after I've taken those paper gains and turned them into cash, I'm going and buying Apple, I'm going and buying Microsoft, right? Those are the three-horse race right now for the largest company. So what I do think there is potential for is for investors to be rotating some of that cash into other mega cap names that have fallen out of favor a little bit, especially with earnings coming up in a couple of weeks. I think names like Meta, names like Amazon, they will start to get some love again. And so it's just rotating those winnings over to what you expect to be the next winning horse.
Hey, speaking of, didn't you buy some more Amazon?
I did. I bought Amazon today, so I'm in a way talking my own book here.
Okay.
But I do think that Amazon is one of those names that has a lot of potential still locked up in it, and it's not quite getting the respect that it deserves just looking at the digital advertising component of it and their push into ad-supported revenue in addition to AWS and e-commerce.
Steph, you watch a lot of markets over the years. I mean, when you see something like Nvidia, which has accounted for a third of the S&P 500's gains this month all by itself, and then I told you the astronomical number of market cap that this stock has added since earnings in 21 trading days. What do you take away from that?
Yeah, I mean, like, there's total euphoria over this name, and it's totally overcrowded, Scott, and you have 89% of the sell-side analysts that have buys on it. So where's your incremental buyer and where's your incremental support on the sell side? So I think it's a little bit challenging. It got a little bit stretched, to Bryn's point. I don't think the party is over, but it's had a heck of a run, and there are so many other places within technology that offer better, attractive risk-reward. And you know, I've been a big fan of the PC refresh cycle. I think that area is very very interesting. Not a lot of people are talking about that. And those stocks like HPE, HPQ, Dell, I like Seagate, CDW, even Apple is going to have a Mac refresh. So I think that's an area or those are areas where are more attractive. Nothing is wrong with Nvidia. It just got really overloved really, really quickly. And so if it does take a pause, if it does pull back, there's going to be opportunities, just like the last drawdown in March, where it fell 20%, went sideways for a while, and then eventually recaptured better gains ahead. Because the story for AI, it's not over. You're in the second innings at the least at this point.